Hey, welcome aboard. It's Walter here, and Naked Forex trader and author of the book, Naked Forex. I'm going to talk a little bit about planning for success right now. So that's the plan. So let's get into it and hop into it. What I want to do first is share with you my fancy schmancy tester, Forex tester, which is a simulator. And you should be able to see that, I do believe, right now. Right about now. Cool. And here it is. Okay, so what are we on here? It looks like we are on the old, what is this, a Euro 4-hour chart. Now, one of the things, like if you're a wedding planner, one of the things that you have to do, obviously, as a wedding planner is you have to decide how am I going to plan for this wedding? Like, what am I going to do? You have to decide, am I going to plan for rain or plan for sunshine or what have you? You have to have a contingency plan, right? And with trading, it's the exact same thing. The way that I like to look at it is I plan for the worst, but I really hope for the best. But then there's another area of this. And I talk about this in the Naked Forex book. By the way, if you like this sort of stuff that we're going to talk about right now, you're going to love the Small Account Big Profits course. You can click the link below or above this video to get more information on that. It's currently open. So let me talk a little bit about how we use market biofeedback to tell me, okay, what should I do here? What's going on? I'm going to plan for the worst. In other words, what's my risk going to be? But I'm going to hope for the best, and I'm going to decide, something will make me decide whether or not I am looking at the best or I'm looking at the worst. What's happening? And so let me share with you this chart right here. Looks like we're in a bit of a consolidation. Let's see here. Okay. Now, if it stays in this box for a while, I would look for a breakout. Hey, there it is in the box. Sweet. Okay. It's out of the box. Right. Excelente. So now what I want to do is, actually, let me just switch over here so you can just see only my screen. Otherwise, it's a little bit too hard to see, I think. And I'll zoom in for you too, because I know sometimes it's hard to see on these webinar thingies. So what you do here is, this is the last kiss. I talk about it in the Naked Forex book. Now, my emergency stop, assuming that we get a trade here, I don't know that we will, but if we get a trade here, my emergency stop will be right here in the middle of the box. Let's just see what the market does here. I want it to come back to this box, which it has, and I want it to bounce hard off the box. All right. Is it going to bounce? Sort of. All right. I'm going to put a buy stop above the high here, and my emergency stop loss goes down here in the middle of the box. So if the market goes higher, I'm in on a buy trade. If the market goes higher and clicks me in and then falls back in the box, then I'm going to get out. And I don't want it to close back in the box because I'm saying that the market's come back to this box and it's going to bounce off this and go higher. It has gone higher. Sweet. And now it's gone lower. It didn't close in the box, though. So we'll see. We'll get one more candle. Still hasn't closed inside my box. Still hasn't. Still hasn't. Okay, now it has. Okay, so now my open position right here, you can see it's down, whatever that is, 45 pips, I believe that is. And so I'm going to close the position. But guess what? I'm closing it at 88, 27.88, which is essentially about 41 pips away from my true stop. So I actually saved myself quite a bit by using this idea. And the idea is, of course, that I plan for the worst, but hope for the best. And that's exactly what I believe smart traders do. If you plan for the worst, in other words, calculate your risk in terms of that stop that's so far away from my entry price in that example, which is really what the last kiss trade does. You wait for the box to form, you wait for it to break out of the box, come back down, touch the box, bounce off of it, either on the bottom or the top, doesn't matter. And then if it closes back in the box, you know, okay, I was wrong. It didn't work out like the trade we just had. But sometimes what will happen is it will bounce and it'll keep going in your favor. And that's when you can make a lot of money, right? Obviously. But what's cool about this is even though I calculated my risk on the midpoint of the box, I actually didn't take that amount of loss. So I would have taken like a 0.6 R loss. You know the idea of R, right? R is the amount at risk for any given trade. So you measure trades in R. So if I had a 3R winner, I risked $1,000 and I made $3,000. If I had a 0.6 R loser, instead of losing the full $1,000, for example, on that trade, I lose $600. So I saved myself $400 simply by using this idea of what's the market telling me. Every time I get a new candle, I get more information. I call that market biofeedback in the Naked Forex book. And this is something that tells me, okay, hang on. Is everything still right? Are my probabilities still what they look like at the beginning of the trade, or have things changed? Almost always you'll find that things have changed. Now, it's not always the case that you're going to actually decide, okay, as soon as the market does this, I'm going to get out of the trade. Sometimes you'll just hold on to the trade all the way through and say, look, I'm just going to let go of this trade. It's either going to hit my stop loss, or it's going to hit my target, or my trailing exit's going to take me out at a profit or a slight loss or whatever it is, but I'm not going to adjust it. You can do that too, especially if you beat yourself up when you make mistakes, which we all do, obviously. We're not perfect. We don't know exactly what's going to happen. And we don't have to predict the market. Sometimes we feel like we have to predict the market, but really all you have to do is follow the market. That's what trend following is all about, right? So I just wanted to share this with you, that if you're able to use a system like The Last Kiss, you can actually use market information to reduce your average loser. So what's going to happen now, if I have a system where I have set and forget, what's going to happen? If I have a set and forget system, I will always lose 1 R. Actually, I'm going to lose more than 1 R on average, because sometimes I'll get slipped and gapped and all that sort of stuff. But if I'm using a system like Last Kiss, guess what? My average loser is now totally different. It's not going to be exactly 1 R or a little bit more than 1 R. I might average 0.8 R or 0.7 R over hundreds of trades. And that obviously helps make it easier for me to make profit, because that changes the reward risk ratio completely for me. So I just wanted to share this with you. Sometimes you can use market information to adjust and say, okay, wait a minute. I thought that it was going up, but now it looks like it's not going up, like I showed you in that example trade. Hopefully this helps. I wish you happy trading. If you want to join us in small account, big profits, you can click the link below or above this video, and we'll see you there. See you later. Bye.